In this video, I'm going to reveal the top price action strategies that I like, that I think every pocket option beginner certainly can use to achieve more success on the charts. So let's get into it. Okay, starting with the breakout patterns. Now, you're going to see breakout patterns occur when the price experiencing a sharp and sudden movement in one direction. Okay, oftentimes it's going to follow a consolidation phase. Like for example, a period of price consolidation may end with a significant downward move, and this is what we consider a breakout. Most times traders are going to be using these patterns like wedges, triangles, and even rectangles. That way you can identify potential breakout points before they even occur. Next, we have reversal patterns. So reversal patterns indicate a price movement in the opposite direction of the current trend. Okay, and that way it's forming a counter trend. Now, the most specific chart patterns that you're going to see that often do this are the double tops. You've heard me talk about that a lot. Head and shoulders. But all of this is going to help you anticipate a reversal. Next, fair value gaps. You've seen my videos on fair value gaps. Now, if you don't know, a fair value gap forms when a candle shows a significant gap resulting from an imbalance in buying or selling activity. Okay, so the way you can identify this, you're going to locate a candle with a large body and you're going to draw a rectangle covering the gap between the previous candle's wick and the next candle's wick, just like this. This gap right here acts as a potential area where price may return before continuing its trend. Moving on, candlestick patterns. Candlestick patterns are the best to analyze future price movements based on specific candlestick formations. Now you have to learn to train yourself to recognize patterns that provide insights into market trends and potential reversals. Each pattern, like the engulfing candles, talked about that before, or doji formations, all of these will tell us a story about market sentiment and potential direction. That way you can master these, and when you do, it's literally like learning to read the market's mind. Support and resistance. Again, I did a video on this as well. This is basically the backbone of trading. Support is where price tends to bounce up, and resistance is where it struggles to go higher. You can also look at support as the floor and resistance as the ceiling. Now, these levels act as barriers, and the more you understand them, it's going to help you predict price even more. Hakashi Candles. Now, typically, I always trade on the regular candles. Now, many people like the Hakashi Candles because they believe that it creates a little bit more of a smooth price action, giving you more clearer trends, and it also helps cut down on a lot of noise too. So instead of showing all the wicks and jumps, they average out movement. Okay, so it helps you spot the bigger picture. And they are great for identifying strong trends and staying in trades a little bit longer than 1 minute or 2 minutes. Trend lines. This is a popular one that I've been using lately. So you can draw them from the highs or the lows of a trend to see where price might bounce or break. Now, the way you want to use them is a visual guide, so you can catch either a breakup, obviously up to the upside or the downside. Next, momentum indicators or trend indicators. Now, I like using the RSI. The RSI is one of the popular indicators used in binary options. So as a momentum indicator, what this is going to do, it's going to measure the strength of the price movement. Okay, this RSI will help us confirm our trends. It'll signal an overbought situation or an oversold condition. So RSI is simply just another way to add confidence to your trading. Supply and demand zones show where the market has a strong reaction. Now, in these zones, they highlight areas where price is likely to reverse or consolidate. So when you spot them, this is literally going to help you start trading like a pro. All right, market structure. Now, market structure is really about the big picture. Okay, higher highs or higher lows in an uptrend, or lower lows or lower highs in a downtrend. So understanding structure also gives you the clarity where the market is headed and how to trade with it. Break of structure. I've talked about this many times before. A break of structure is a shift in the market trend. When price breaks a key high or a key low, this often means that the trend is reversing or accelerating. Recognizing break of structure is another key way of catching a trend very early before it changes. Okay, so that's it. If any of this makes sense, or if I've missed a strategy that you need clarification on, then let me know in the comments. I do hope all this helps. I'll see you in the next video.